Hi guys, so 1st of April onto gold. Interesting price action so far on the 4-hour time frame. What we can actually see, if I translate daily time frame first, is that the upper wick boundaries 1, 2, 3, 4, 5, 6, 3-pin formation over here, back end of the shooting star there, bearish engulfing right here, 1, 2, shooting star breaking the TL counter trend line. But what's important is that I did bring this up on a previous video, but I'm going to do it again, is that we had 1, 2, A, B, C, then we have the minus 27 at 1263. 1263, so it's just shy of 300 pips for gold. What's important at the moment is the Friday candlestick spiked into the highs, couldn't remain, sustain that high. And what I'm looking for now is a break back below. We can see here where this range is, taking you up to the top of the wick, to the bottom of the wick. Okay, 1, and then 2. Consolidation, 1, 2, 3, 4. What we can see, we're coming into that region now. We need to break through that to give us further momentum. Weekly basis, weekly standpoint, great so far in terms of nothing has changed. 1 wick into the high, 61, and also the key level there, but you can see this is a clear fib, A, B, C, D. Coming into the 4-hourly, gold is pushing for a potential new low here. We have signs, 3-pin up there. We have, this was a region, small box region, wicks to the high, wicks to the high. We broke our counter trend line there too, and we also retested it, wick to the high. Wick to the high, marking a 1299, I would say 1300 point. I think gold, for it to show further upside, it would have to break this zone. And now at the moment, 1296, 1297, we're looking at gold continuing to the downside and boom, rolling into that fib zone, fib level. This one's relatively straightforward, to be honest. On gold, it's just continuous selling pressure. What I would wait for though, a good entry, because Monday is a little bit slow, I would wait for, see the bottom of this wick here, I would wait for the daily candlestick to close below it. That tells me the momentum has now found its path again. Today's candle could stay like this, then the next day, okay, we're waiting for it to take out the low, because the wicks, momentum loss, momentum loss, momentum loss, especially after this move here, this is consolidation, price build up. To give us that continuation, we can simply wait for either this area, 1286.55, to be taken out on a lower time frame, maybe a 4-hourly, or we can wait for the daily to push through. The market may come back up to retest that on a smaller time frame before coming lower. H4, let's have a look at this then. So H4 over here, look at this base, 4-hour support. What we're going to do now, gold, we're going to, boom, nice body, close below, maybe in 19 minutes time. Stops will go past the high, maybe 3 to 5 pips above, and then we'll take this down on a huge leg, a decent leg. If I was to throw a risk reward tool on there, if we did get that break, so the break, stop just above the high there, and then target, bang, 239 pips. Stop of 103. 4-hour / daily trade. You can see the lower swing high forming here, lower swing high forming here. 18 minutes, we just need that candle to close, momentum to step in, and we could be in for a nice leg to the downside. Let's see how this one plays out, and I'll catch back up with you on Wednesday. Hey, so on to gold, April the 3rd. Now, picking up where we left off last Monday, there's not really too much price action that has changed. All I can say is from the risk reward tool that we put on in the short entry, after we broke out of the 4-hour boundary right here, the blue line, price has just been relatively low in terms of volume. What we have done, after the small pop up there, okay, we have seen a new swing high, 1295. So I'm expecting now for moving averages are still crossed to the downside. As you can see, the blue is below the red, 8 is below the 14 at the moment. But yeah, I mean, targets still expected at the Fibonacci, 1264. I said the market hasn't moved in 2 days. So some videos as I do go along, guys, this could be the case where I can't really catch up on too much. Looking at the daily, let's have a look at the daily chart. Looking at the day, we did pop up a little bit on the day yesterday after we broke more or less below the 2 wicks. Because why? This area, look at the wicks are 1, 2 and 3. This area is a huge liquidity spot. So it can flail around a little bit before breaking through, but when it does break through and clears this area, the volume will step in immediately. So today's high, as you can see where the crosshair is at 1294.4, is lower than the previous spike, 1297.04, and then the previous at 1299.6. So let's just be patient with this one. It's a decent risk reward. It's a 1 to 2.3 risk reward, going for 239 pips with a stop of 103 pips. So far so good. Nothing has changed yet. Let's just see if the momentum can follow, and I'll check back in on Friday with the result. Okay, so Friday, April the 5th, gold has been slow, sluggish, and it's more or less, I can tell the volume here is very, very low due to these sudden liquid spikes. If you can remember, we did have the Fibonacci drawn on. Again, I can keep this video very, very short and sweet. 61, I'm looking at the minus 27% extension to be filled. Doesn't look like we're probably going to get that now, considering it is 5:25 p.m. on Friday. My initial short entry on here was due to the breakout of where my crosshair is. I've just deleted the level, but that right there, guys, is a 4-hourly low taken from the base of the bodies and stretched over. It's intraday. Boom, boom, boom. And if I now just go ahead and move that to the right and line it up to my entry a little bit higher, there we can see that it's halfway to SL, which is probably minus like 40, 45 pips at the minute. I'm sticking to my rules though of keeping that 3 to 5 pips above the initial high, because this is where we had the break. Because remember, we had the swing low, and then we had one here as well. MAs were still down at the minute on the day. If you look at this price action, the moving averages are still converged, but there's the price is being squeezed. It's more or less box range. This is box range material, which I can probably go ahead and actually apply. I'm going to apply, actually no, I'm going to leave it on that. It's a bit too messy because it can change into next week. Now what's important to realize though is that 1, 2, 3, 4, we already recognize this is a huge liquidity point. The market has to break through this and the market has to close below it for then the avalanche to come through. This is when the money will start to come through. But for now, it's still trying to make up its mind. It can actually rebound to the upside before coming down or reverse completely due to the price action that I see on this spike, this spike, this spike, and this spike. Crosshair suggests 1287.4 is a key zone in which the market cannot penetrate and hold below. It has penetrated on 4 occasions, but the market can't hold below. So this may well be a failure. In this case, because it is Friday and it's getting late, I would leave it until 8 p.m. If it hasn't done what I wanted it to do by 8 p.m, I'll cut it and I'll take the loss, 30, 40 pips. But into next week, perhaps we could maybe wait for this to maybe roll over. If this was a Wednesday, perhaps Tuesday, Wednesday, I would leave this trade on and I would still have faith of the downside melt. But for now, because it's Friday, word of advice is to close your trade by 8 p.m. and come back to the market fresh and level-headed, because you don't want to leave this on. Market opens Sunday, 11, 12 p.m. with the gold market. You get stopped out and then you're in a bad mood for the week ahead. So this is just a case, this is a scenario. The risk reward made complete perfect sense. A 1 to 2.3, 100 pips for risk, 239 pip reward. Unfortunately, this is the reality of it. And yeah, even though the market is still making these prominent little lower swing highs there, and then even here. What I would suggest though, if this was a different day, we could place that zone on from the candle bodies, and then only if it broke above that could then we say, okay, this scenario is now void and we can now head to the upside. What the other worrying factor is that if you look at this price action, it's replicated here, spike in, 1, 2, 3, 1, 2, 1, and every time it's coming back above 1287 and 1288. So that's that, guys. We'll track this one into next week, and we will see if we can actually break down a decent trade opportunity going forward. Thank you.